Here's something that should make you angry. For over 100 years, the wealthiest people in the world have been using a simple system to make their money grow automatically, quietly, consistently, and nobody taught it to us in school. Not one class, not one lesson. Why? Because people who understand how money works tend to stop needing to work for money. Today, I'm breaking that cycle. In the next 5 minutes, I'm going to give you a complete beginner's guide to investing in 2026, step by step, no jargon, no gatekeeping. Whether you have $10 or $10,000, by the end of this video, you'll know exactly what to do. This channel is about building real wealth through real strategies. Hit subscribe so you don't miss a single video. Let's start from the very beginning. Step 1. Shift your mindset about money. Before you invest a single dollar, you need to understand one fundamental truth. Money is a tool, and tools work for whoever learns to use them. Most people treat money as something to spend. Wealthy people treat money as something to deploy, to buy assets that generate more money. Investing isn't gambling, it isn't luck. It's the disciplined practice of putting your money to work in assets that grow over time. The S&P 500, an index of America's 500 largest companies, has delivered an average annual return of around 10% for over 50 years. That means money invested consistently, over time, doubles roughly every 7 years. This isn't magic, it's math. And the math works for everyone, including you. Step 2. Build your emergency fund. First, I know you're eager to invest, but don't skip this step. Before you put a single dollar in the market, you need 3 to 6 months of living expenses saved in cash. Why? Because markets go up and down. If an emergency hits and you're forced to sell your investments at a low point, you lock in losses and destroy the compounding process. Your emergency fund is your financial seatbelt. Put it in a high-yield savings account which earns interest while staying liquid, and don't touch it unless it's a genuine emergency. Once that's in place, you're ready to invest. Step 3. Choose the right platform. In 2026, investing is more accessible than ever. The platform you choose depends on where you live and what you're comfortable with. In the US, Fidelity, Vanguard, and Schwab are the gold standard for long-term investors. Robinhood is great for beginners who want a simple interface. Internationally, eToro operates in over 140 countries and offers zero-commission stock trading. Look for platforms with no account minimums, zero trading commissions, and a user-friendly app. Don't overthink this. Pick one. Open an account. The act of starting is more important than picking the perfect platform. Step 4. Start with index funds and ETFs. Here is the single most important investing advice I can give you as a beginner. Don't try to pick individual stocks. Even professional fund managers fail to beat the market most of the time. The data on this is overwhelming. Instead, invest in index funds or ETFs, funds that track the entire market or specific sectors. The S&P 500 ETF, for example, gives you exposure to 500 of America's biggest companies in a single investment. Warren Buffett, arguably the greatest investor in history, has publicly said that for most people, a low-cost S&P 500 index fund is the best investment they can make. Lower risk, automatic diversification, consistent long-term growth. This is the foundation of a smart portfolio. Step 5. Invest consistently using dollar-cost averaging. This strategy is simple, powerful, and proven. Invest a fixed amount at regular intervals, no matter what the market is doing. $50 a month, $100 a month, $200 a month, whatever you can afford. When the market is up, you buy fewer shares. When the market is down, you automatically buy more at a discount. Over time, this smooths out volatility and builds a significant portfolio without requiring you to time the market perfectly, which nobody can do consistently. Automate this process. Set it and forget it. Let compound interest do its job. Step 6. Diversify as you grow. Once you've built a foundation with index funds, start thinking about diversification. Spread your money across different asset classes, US stocks, international stocks, bonds, and potentially REITs, real estate investment trusts, which let you invest in real estate without buying property. Diversification means that when one sector struggles, your entire portfolio isn't wiped out. Think of it like a sports team. You don't win championships with one player. You win with a balanced, well-rounded lineup. Step 7. Be patient and stay the course. This is the hardest step, but also the most important. Markets crash, headlines scream, recessions happen, and every single time there will be a voice telling you to sell, to panic, to get out. Ignore that voice. Historically, every market crash has been followed by a recovery, and those who stayed invested came out ahead. Someone who invested $200 per month starting at age 25, assuming a 10% average annual return, would have over $700,000 by retirement. The strategy isn't complicated. The discipline is the hard part. But that discipline is exactly what separates those who build wealth from those who watch it pass them by. 7 steps to start investing in 2026 as a complete beginner. 1. Shift your mindset. 2. Build your emergency fund. 3. Choose the right platform. 4. Start with index funds and ETFs. 5. Invest consistently using dollar cost averaging. 6. Diversify as you grow. 7. Be patient and stay the course. Simple, proven, life-changing if you actually do it. I want to hear from you. Drop a comment below. What's your #1 investing goal for 2026? Are you trying to build an emergency fund, start your first investment account, hit a certain portfolio number? Tell me. I read everything. If this video helped you understand investing better than any class ever did, smash the like button right now and subscribe, because next week I'm covering the best ETFs for beginners in 2026, including the exact ones I'd buy if I were starting from scratch today. The best investment you can ever make is in your own financial education. You just made that investment. I'll see you in the next video.